averages closing in the green after President Trump announced a trade deal framework with the UK. Commerce Secretary Howard Lutnick telling us just moments ago, quote, "We're going to roll out dozens of trade deals over the next month, but that the 10% rate is the best a country can hope to get." So joining us now is BofA Global Research Head of U.S. Small Mid-Cap Strategy, Carey Hall. Jill, it's great to have you back on the show. Let's start right there with how trade is affecting the market and giving lift to stocks, particularly some of those stocks that have been most exposed or believed to be most exposed, like, for example, the small caps.
Right. Thanks for having me. Yeah, I mean, I think, while it's an incremental positive, I think the more deals that we get that can help remove some of the uncertainty overhang. But it's still just one step. I think China will be very key as well. And for small caps, we've been cautious in the Russell 2000 in part because these stocks would be more at risk from an earnings perspective, given how thin their margins are from tariffs. But we also have had other headwinds to small caps. The Fed remaining on hold. This is the segment that has the most refinancing risk, is very sensitive to interest rates. And, as we've seen this earnings season, this is a segment that has struggled to get out of its earnings recession that it's been in for a few years now. We still saw negative earnings growth for small caps this quarter. And, sentiment, when you look at how corporates were speaking on earnings calls, analyze some of the positive versus negative words, it plummeted a lot for corporates overall, but it plummeted more for small caps. So I still think it's a bit early for that size segment, and I think it's not as easy as just buying or selling the Russell 2000 anymore. I think you need to be more selective.
Something that got my attention is the fact that you've enacted a recent sector change. You upgraded S&P 500 energy to overweight, which to me is pretty interesting, given what we've seen happen with crude oil prices in the last couple of weeks and all of these concerns about trade dynamics and what it'll mean for economic growth.
Right. Yeah. So within our large cap work in the S&P 500, we did upgrade energy. I think that this is a sector where oil prices are certainly important, but and we have risks given supply and given where oil prices are. But the sector's sensitivity to oil prices has actually declined a lot when you look at relative to say 2016, 2017. The sensitivity to oil has gone down substantially, and we think that this is a sector where, you have a 6% free cash flow yield, dividends for the sector. This has become an important theme there. And positioning. This is a sector that is, extremely neglected. Active managers have reduced their exposure. Hedge funds are net short. We've seen a bigger decrease in exposure and positioning for this sector than others. And with recent underperformance, we think it looks like a coiled spring.
Okay. And finally, your takeaway from earnings season so far and how it positions us for the rest of the year more broadly, looking across stocks.
Right. I mean, earnings have come in better than consensus and even we expected for the quarter. S&P 500 is seeing double-digit earnings growth in 1Q. And, I think the things to watch for are that, guidance has certainly been weak. It's also been a bit sparser than usual. That did improve a bit as we moved through earnings season. But, you've seen fewer companies issuing annual guidance at this point in the year than you did a year ago. So that still speaks to the uncertainty around, policy and trade. And, as mentioned, we have seen, mentions of weak demand. Corporate sentiment on earnings calls have gotten worse, particularly for smaller companies. And CapEx spending, I mean, it has held up for the hyperscalers and the Magnificent Seven versus decreased elsewhere. CapEx guidance has started to deteriorate a bit. So we haven't seen a significant tick up in project delays and cancellations, but certainly seeing some increase there. So I think those are some of the things we're watching going forward.
Okay.
But overall, corporates have been resilient, and within this mid-size segment, we've seen more resiliency to mid caps. So we'd focus on stocks that have positive revisions in this backdrop where revisions have been coming down. We'd focus on mid over small and on sectors that are seeing more positive trends.